When I look at the charts right now, the gold chart, and I like to look at the longer-term charts rather than the short-term charts for this reason. The long-term gold chart is a thing of beauty in my mind. This inverted head and shoulders at this level of gold's bull market over the past 8 years is just extremely rare and unbelievably bullish. It suggests to me we're going to be going over 1,000, but gold is usually the third thing that goes over critical resistance. Stocks normally lead. So here's what I'm sort of watching and see how this thing unfolds in the weeks and months ahead. The XAU index, which is the gold stocks index that I follow most actively, once it breaks above at least the 154 area, preferably into new high ground in 162, that'll be the first thing to go, and that'll be a good sign that the bull market is starting to heat up. The second thing will be silver moving back above $15 an ounce. I think you're going to see both of those two things happen before you get gold over 1,000. But once you get the XAU in new highs, you get silver back above $15 an ounce, then you're going to see gold over 1,000. Once gold goes over 1,000, that's going to be like an international wake-up call. It'll be a news event around the world. And, even if people don't understand why gold is over 1,000, they're going to start, jumping in and buying it because, gold is the canary in the coal mine when it comes to monetary events. And a rising gold price, particularly when it takes out a important hurdle like 1,000, will be a clear buy signal to everyone.
And that canary is still singing at this point, but who knows how much longer. And your scenario of monitoring the XAU, I actually follow it most closely too. I think it's an excellent proxy and leading indicator.
It's a leading indicator. Sometimes it hasn't been because the margins of mining companies have been squeezed in recent years because of the high energy costs, which have risen much more rapidly than the price of gold. I think that energy costs are now back to a more normal level, which means that margins of the mining companies should continue to widen, and I think the mining companies are going to resume their role as a leader for the whole precious metal sector.
And you don't then believe that perhaps the XAU could continue its ascent and not reach new nominal highs and still have the elemental breaking to 4 digits?
It's not likely.
Okay.
I think this time around the XAU is going to lead, silver will be second, and the third one to finally clear the resistance will be gold when it goes over $1,000 an ounce. I expect this to happen this year. I mean, it could happen in a few weeks. We just don't know. Everything, to me, seems set up, both from a fundamental point of view as well as a technical point of view, looking at the charts. Everything seems to be set up for higher prices. But again, don't focus on the price of the bullion. Just month in, month out, keep saving that bullion because in the long run, before this economic depression is finished and before this bear market and the dollar is finished, you're going to be happy that you have that gold. Silver is going to lead gold. First the XAU, then silver, then gold. And in the long term, I'm more bullish on silver than I am on gold, but silver's not for everyone because it's much more volatile. As a rule of thumb, if you want to own both, then own 2/3 gold and 1/3 silver for your precious metals allocation. Longer term, I think the ratio, how many ounces of silver it takes to buy an ounce of gold, will continue to decline. And the only reason why the ratio rose last year was because of the forced liquidation after the Lehman Brothers collapse, when everybody was, selling whatever they could to raise the capital to, meet the hedge funds meet their margin calls and things of that nature. So you saw the pressure in silver. But, silver remains in a major bull market just like gold does, and I continue to expect from a long-term point of view that silver will continue to outperform gold, meaning the ratio will drop from its current level in the high 60s, at least to 20 ounces of silver to buy an ounce of gold before this bull market in the metals is over.
Let's say, for the sake of argument, that ratio were to come into play and gold were to remain static. You would be looking at an absolutely huge increase in the price of silver, even if the bull market were to be at a stalemate for some time. So
yeah. That's true. I don't expect, though, that would happen. If gold were in a stalemate, I would expect silver to also be going sideways. The way I see it right now is, gold is continuing to climb toward that $1,000 level. Its 200-day moving average is starting to turn up, which is suggesting that momentum is building. Every time gold dips back, it's well bought. I mean, we just had an example of that earlier this month. It took gold a long time to get above the 912 to 915 area. It finally broke through, and we had a big run up to the 960s. The gold cartel stepped in and forced it back down. But it couldn't even get it back down to the previous breakout level, the 912 to 915 level. Gold stopped in the 920s and turned around and here we are again in the 930s, just below resistance at a new level of resistance at 940. So, gold is building momentum. I think you're seeing a lot of good, strong physical demand. In fact, the COMEX, most of the month of June, the June-July spreads were either flat or June was in backwardation to July, which suggests that there's been good demand for physical metal in the COMEX. So to me, it's just a question of timing, and eventually it's going to happen that gold is going to go higher. It has to, because the dollar is just getting debased, and gold's going to continue to perform its historical role as money.